Okay, students, now let us solve question number 47. So let us start with asset column again, one more time. So we have cash in hand, cash at bank. Okay, so we will not include these two in the realization account. Now we start with stock in trade. Okay, after that we write investments. Okay, after that we write debtors. Now for debtors we have provision here. So let us write the provision towards the credit side of your realization account. Okay, 4,000. Okay, after that we have plant and machinery. Okay, after that we have buildings. After that we have goodwill. Okay, and the profit and loss account will not appear because it is your accumulated loss, so it will appear in the partner's capital account. Now let us move on to the liabilities column. Okay, so in liabilities column we have sundry creditors. Okay, sundry creditors here. Okay, after that we have bills payable. Okay, and then we have Mrs. Biraj's loan and Mrs. Rajan's loan. The Mrs. loan will be okay. The wife's loan are considered to be external liability. So external liability it appears. Okay, partner's loan. Okay, partner's loan or the loan provided by partner or loan given to partner are treated as internal loan, but loan provided to any of the relative of partners are treated as your external liability. So these external liabilities will appear in the uh, credit side of your realization account. Okay, now again this reserve fund will not appear because it is your accumulated profit. So this will go to partners capital account. After that we write this investment fluctuation reserve here. Okay, so these are your transfer of amounts from balance sheet. Okay, now let us start with the adjustments that are given here. So now first of all we have Biraj took over stock in trade and in consideration promised to pay off Mrs. Biraj's loan. Now Biraj is taking over stock in trade. Okay, in consideration to make the payment of his wife's loan. So his wife's loan is how much? 8,000, right? So this stock in trade is how much? 10,000. So wife's loan is how much? 8,000. So he is taking over the stock so to make the payment of his wife's loan. So wife's loan amount is how much? 8,000. So it will be assumed that stock in trade will be taken over by Biraj at this value, okay, as purchase consideration, or you can say simply consideration. Okay, so Biraj will take over stock at rupees 8,000. Okay, so don't get confused, because in point number one, if you see closely, there is no amount mentioned out there. So how will you come to know? You need to consider the amount. That is why it is called consideration. Okay, so payment consideration is how much? 8,000 for his wife's loan. Okay, so again the same will be coming here. Okay, as to Biraj's capital account, in bracket you can write by Mrs. Biraj's loan. Okay, so he has promised to pay off this particular liability because this is your external liability. Okay, and we are making the payment to yes, we are making payment okay, to that particular person. Okay, Mrs. Biraj. Okay, so it is by one of our partner. Okay, so when the partner makes payment to the external liability, so it has to be adjusted through his capital account. Okay, and the stock taken over will be uh, credited here. Like in question number 36 before, we saw that any payment made to pay off the liability will not be recorded, but this is not the case. Okay, we are making payment, but firm is not making payment, but a partner is making the payment here. So we have to pay to that particular partner because this loan, okay, this Mrs. Biraj's loan is an external liability. Okay, and this loan is not given to Mr. Biraj alone. It was actually provided to the firm. So as a firm, uh, when any partner is making payment for such kind of loan, the firm is liable to make the payment to that particular partner. So we are having this kind of consideration here. Okay, so we can move on to point number 2 now. Rajan took over half of the investment at 10% discount. So investment is how much? 10,000. So its half will be how much? 10,000, right? So he is taking the investment at 10% discount. So 10% of 10,000 will be how much? 1,000. So 10,000 minus 1,000 will be how much? 9,000. Okay, and remember that this 50% is still there. Okay, now after that we have this debtors realized how much? 38,000. So I have written here debtors realized 38,000. Okay, and this creditors and bills payable were due on an average basis. Okay, 1 month after 31st December. This 31st December, okay, one month. Okay, so we can have this kind of adjustment here. Okay, so 60,000 into 6 by 100 into 1 by 12 equals to rupees 300. Okay, again after that we have a discount on bills, 16,000 into 600 into 1 by 12 equals to rupees 80. Now this discount on creditors is 60,000 into 6%. 6% is a given rate. Okay, so why we are doing 1 by 12? This 1 by 12 we are doing because the payment was to be given after December. That is, they are having the payment of, they are not sorry, they have not reached the due date. Okay, which is after 1 month, but the the firm is getting dissolved before that time period. Okay, so we are getting the discount here. So if you make any form of payment before your due date, you get a discount. Okay, if you make your payment of any form of EMI or installment payment, if you pay before the maturity date or due date, you get the discount on your EMI or installment payment. So discount on creditors is 60,000 into 6 by 100 into 1 by 12, it is 300. Okay, combined, okay, you can do that. Okay, so, this 60,000 plus 16,000 into 6 by 100 into 1 by 12. Okay, the total will be 380 rupees. Okay, but I have done it here separately. Okay, so to explain you properly. Anyway, so the this creditors will be paid 300 less. Okay, just now we calculated the amount. Okay, so 60,000 less 300 will be 59,700, and the bills payable we are making this 80 rupees less. Okay, so it will be 15,920 rupees. Okay, and in question, if you see properly, there is no mention about Mrs. Rajan's loan. Okay, so if there is no mention of any liability or any asset, it will be realized that the full amount is realized. Okay, or any liability is paid in full. So here it will be assumed that Mrs. Rajan's loan is paid in full amount. Okay, so the total will be 97,620 rupees. Okay, for your liabilities paid. Okay. After that, we have point number 5, which talks about the realization of assets. Okay, plant 50,000. Okay, plant 50,000. After that, we have buildings 80,000. Okay, and goodwill is 12,000. Okay, and the remaining investments, which was after this Rajan. Okay, Rajan, he took over 50% of that. Okay, so 50% is still left. That is 10,000 is still there. So this leftover investment is again realized at this value 9,000. So the total will be 1,89,000. Okay. So after that, let us move on to point number 6. So it says that there was an old typewriter of rupees 600. Okay, which was not recorded in the books. Now is taken over by Rajan. Okay. So we will write by Rajan's capital account, typewriter taken. Okay, 600. Remember that this typewriter was not recorded in the books before. Okay, so after that we have realization expenses of rupees 2,000, which will be paid by the firm. Okay, so the entry will be passed through bank account realization expenses. Okay, this 2,000. Okay, so after that we find the balance, and the balance will be 62,980. Sorry, this amount will be here, okay, not here, okay. The amount will come here. So 62,980 rupees, and the partners are equal, so we will distribute this profit on realization to both Biraj and Rajan equally. Now we will move on to partners capital account. Now partners capital account, you can see here by balance BD, okay, we have extracted from the balance sheet, okay. Now then there is reserve fund, okay, which will be shared equally between them, okay. And again we have this particular section, okay, you can see here to Biraj's capital account, okay, Mrs. Biraj's loan. So this entry will be passed in the credit side, okay, by realization account, Mrs. Biraj's loan, because Biraj, he has promised that his wife's loan will be paid by him, okay. And for the same, he is taking over the stock at rupees 8,000, okay. And the entry for the same is here towards the credit side of your realization account, okay. So after that, there is a profit on realization, okay. So put the amounts here. And now let us move on to the debit side. In the debit side, this profit and loss, which was profit and loss account, which was appearing in the asset column of your balance sheet of rupees 7,000, will be debited to partners capital account equally, okay. So after that, we have one more at this entry, okay, of Rajan of investment taken over at rupees 9,000. Sorry, so this 9,000 will be recorded here, okay. After that, again, Rajan is taking over the typewriter, okay, at rupees 600. So this 600 will be here, okay. After that, you will find the balance, and the balance will be, I mean, the final payment to the partners will be this 5799048390, okay, to Biraj and Rajan respectively. Okay, so this is your final payment. Now, after that, we prepare bank account. Okay, so when we prepare the bank account, we extract the balance of this bank balance from the asset column of your balance sheet, okay. And we have cash account also, okay, which is 1,000, okay. So we will include here in the bank account, okay. We include cash in our bank account, okay. So let us go to realization account. Then we have the assets realized of rupees 1,89,000, okay. So you can simply put the amount here, 1,89,000 rupees, okay. After that, we have the payment to liabilities, which we have already seen here in this section 97620, okay, 97620. And again, we have the realization expenses of rupees 2,000. You can see here, okay, 2,000 payment, okay, for realization expenses. So then after that, we have the final payment to partners. Now put these two amounts out there, and okay, and the total will be 106,380. Now the total of balance sheet, this bank account should match together, okay. So the total will be 2,06,000. So always remember that in case of dissolution, your bank account, it acts like a balance sheet. So both debit side and the credit side should match together, okay. The total of these two sides should be equal,